Hi, everybody. February 16th, the market update desk powered by Mortgage One with Scott Riley, your singular source for market information, giving you the knowledge that you need. Well, we had wholesale inflation come out today, producer price index or PPI, and not what I expected, not what we thought, not what anyone in the market thought. So we're having another tough day in the market. Let's kind of run through the numbers here, see where it leads us. So producer price index, which measures the wholesale cost of inflation, the headline came in at plus 0.3%, which was hotter than the 1/10 expected. And we actually thought we were going to get a little below the 1/10. Now, year over year producer price inflation fell, which is good, from 1% to 0.9%. Now, while it did decline, we were actually expecting it to get down to 0.6. The core rate, which strips out the volatile food and energy, rose a very surprising 0.5%, which was much hotter than the 1/10 expected. Year over year core inflation actually rose from 1.8 to 2%. Now, the market was expecting we'd end up at 1.6% year over year. Now, the concerning part is some of the PPI components will bleed over and flow into PCE at the end of the month, personal consumption expenditure. And that is concerning because we think now it might be a disappointing report. We've definitely taken it on the chin between consumer inflation, wholesale inflation. There were seasonal adjustments in there. There were some very unique things in there that makes us question some stuff. Again, one of them was wealth management expenses. Healthcare expenses rose more than expected. And government purchasing wholesale came in higher than expected. Now, these there's some oddities to these. We're going to have to wait to see till next month's report if these were one-off expenses or if these are going to be now a pattern that's forming. Housing data also came in today for new homes. Housing starts fell almost a whopping 15% in January to an annualized rate of 1.331 million, which is much less than what the estimates were on the streets. More concerning was single family starts fell 5% to 1 million units on an annualized pace. This is definitely less than what the market was expecting. Single family starts, though, are still up 22% year over year. It just shows what slow pace we are on at the beginning of 23. Building permits, which is an indication of future supply, dropped a slight amount, 1.5% to a 1.47 million annualized pace, and keep in mind, they're still up 9% year over year. Single family permits, the subsector of that, rose 1.6 million to a pace of 1.05 million. So that's a good sign. Looking deeper into the multifamily starts and permits. Starts are now at their lowest level since 2019, and permits are at their lowest level since 2018. Now, with a massive supply of multifamily home properties coming on the market now, we should start to continue to see a lessening of a pace of rent price growth. But in the coming years, the lack of building permits could put pressure on going higher, maybe in 25, 26, 27. So there are some concerning numbers that are within this. Completions fell 8% last month, while single families, the subsector of that, fell 16%. Those are concerning numbers again. When we look at the new supply of completed homes, they're on pace to come on the market this year, about 1.4 million. Subtract out the usually about 100,000 homes nationally that will need to be taken out of inventory due to disrepair. That puts the figure at a net of about 1.3 million. Now, household demand or housing formations is targeted to be at 1.7 million. So we're still seeing that big gap between demand and supply, and that's going to continue as we've talked for many years. So the National Association of Home Builders Index for February, which measures builders' confidence, rose 4 points to 48, which was 2 points above estimate, which is some good news. Overall, the index remains still in neutral or slight contraction, but we're really close to that 50 mark, which indicates expansion. And we're actually up 14 points since the low point last November. Within the internals of this, we saw current sales index rose 4 points, future expectation index rose 3 points, and buyer traffic index, from what builders are seeing, increased 4 points, and that to the highest level since August. Now, according to the NAHB, in February, 25% of builders reported cutting home prices. That sounds like a lot, but that's actually down from 31% that was in the previous month and 36% from 2 months ago. Meanwhile, the use of sales incentives, and this is a big heads up to buyers, 58%, let's see, sales incentives are also diminishing. The share of builders offering some form of incentive, whether sales price, points, subsidized interest rate, dropped to 58% in February, down from 62% last August. So that's a sign that incentives that builders were doing are starting to fade away. So that's why buyers need to be out there right now as we're speaking. Mortgage-backed securities and 10-year treasuries just are getting hit today. Mortgage-backed securities are down about 24 basis points. 10-year bond is up, as I'm looking right here, 7 basis points. We're getting close to that 4.3 level again. And we have a short week because next week, Monday, is a holiday. So that also adds potential for volatility within the market. Our concern is later on in about a week and a half when we get PCE. I don't think that's going to come in at where we thought. So prices and rates are going to be challenged here probably until we get into maybe mid-March. The futures market is now betting on potentially as little as 2 rate cuts this year, maybe 3. Now that's down from a high of where we thought potentially 6 rate cuts. So we might have some challenges ahead as we're going forward. It's going to be even more important that you get out there, look at homes, get in now while you have potentially the better opportunity against less competition and maybe better rates than what we get in the next 2 to 6 weeks. Give us a call, 616-293-2189. We're happy to go through all this with you, help you get pre-approved. It's a great weekend to go out and shop, beat all the competition. We are here as always. The phone is on, working for you. Scott at the Market Update Desk. Have a great weekend.